Good morning, everybody. It's Javier, and I'm super excited to be with you here this morning to share with you very exciting news as it relates to a very dear friend of mine and the company he represents and works for, that is ANICO. We're going to give you a few updates. I'm going to hand the microphone over to him. He's got literally the rest of the webinar. I'm just going to start with the first things first, but before I formally do that, I just want to go ahead and remind everybody that if you haven't done so, check your email. Also on social media, I posted a video that looks like the one on your screen right here, talking about the convention that we just had. Was an incredible event. I mean, every time we come back from the convention, recruiting numbers go up, production goes up, and income goes up. And what they did at the convention, they announced a promotion, if you would, that those that registered for the convention for next year, for Leaders Convention 2023, they were going to give us a special price of only $125 compared to whatever it costs nowadays when you go to these things, especially if you do it after the special goes away. So anyways, it was only good for 24 hours, which I thought defeated the purpose because a lot of people either stayed behind or were still traveling home by the time the special expired. Even so, 14 of our people went ahead and registered, and hundreds, I believe 500 or 600 people company-wide did jump on the special, but it didn't give me enough time to promote it to my team. And so I asked them if we had an EFC call this past week, and I asked them if I could go ahead and have just a little bit of time to give everybody at least a shot to hear me out via the Saturday webinar. And they went ahead and did it for the whole company. So what's really cool about this is that, again, if you register by August 19th, which is next Friday, the price has been lowered again. They rolled it back to only $125. And let me tell you, you will pay the $125 even if all you did was to go listen to this guy, David McKnight. He's the author of The Power of Zero. If you haven't read the book, read it, buy it, give it to your clients. This is the ultimate prospecting tool that talks about the ultimate tax break, if you would, that exists for retirement. And all the top producers in the industry, I believe this is the number two selling book, only to Miss Fortune 101, which is another great author. And so anyways, a great book, I should say. And so if you haven't hear this off my conscience, then I'm going to go ahead and give you guys an opportunity to lock in the $125 price. And, rule number one in success is you better see yourself being not just in the company, but being successful in the company by next August. And so anyways, go ahead and register if you haven't done so. That's the code to go ahead and register, scan with your phone, or just simply log into your FFS portal and you'll see a banner that shows you right there. Michael did it. Okay, so we're going to go ahead, and I can see you, Michael. All right, so you did it. You figured it out. Go Kentucky. And so that's what I'm saying, that you want to make sure you go ahead and give yourself the opportunity to have a fighting chance by attending these events. Now, I saw Andy log in, Andy Bayon, is he on? Andy, if you don't mind sharing your thoughts on the convention, was it worth your time, your money, and effort?
Hey, Javier. Yes, I'm here. I've been to a lot of different conferences and different activities, but this was amazing. It would, personally helped me a lot. As you can see, some of my numbers jumped right after the convention. I came back motivated, and I'm excited for 2023. Thank you for the opportunity. So do it.
Thank you. And I saw that you have had to believe 5 so far this month or something like that. New applications coming in. So like I told you, we get excited, production goes up, recruiting goes up, and income goes up. And if you don't go to one of these things, I think you're just cheating yourself. And I'm not going to beat up on anybody because I understand things are up, but don't let it be because you have a defeated mindset, or you have that poor mindset that, well, I'll go when I make money. And guess what? If you never go, you never make the money. And I know that happened to me for a very, very long time. So anyways, enough of that. Go ahead and do that. Now, if you do register during the promotion period between now and next Friday, let me know. And I'm sending everybody over a vacation voucher that gives you 4 days, 3 nights in Las Vegas that you can actually use during the convention. So your stay is covered. Shirley Lou, who you saw on that slide real briefly, she interrupted my presentation to give a testimonial how she got 8 of her people there using the vacation certificates that I believe in so much. And so all of you here, there's no excuse except those excuses that we make up ourselves. And unfortunately, sometimes we end up believing our own lies, and then we pay the price, and it's a dear price to pay. So anyways, enough of that. Also, just so you guys know, Shirley Lou, who you heard me mention, I love this woman to death. She's a great friend of mine. I've known her for 20 plus years. She's dynamic. I don't know how the hell she does it. But anyways, she's going to be a guest speaker during George's weekly webinar. If you want to go ahead and attend and listen to what she has to say, It's 10 a.m. Monday, and webchat.gm is the link. Webchatgm.com is where you want to go ahead and visit. So without any further ado, I just want to start by, telling you that this is a gentleman I believe in. I, love this guy to death. He's got a beautiful family. Michelle, his wife, is wonderful. I mean, I just can't tell you what a great human being he is, first and foremost, because I don't like to run with people that are not like that. But from a company and a care perspective, if you have not, there was an old commercial that said, have you driven a Ford lately? If you haven't submitted business to ANICO lately, if you haven't taken them for a spin, you need to do that immediately. It's crucial that you diversify your business. It is crucial that you go ahead and understand the power of working with different carriers. ANICO does a great job of working with a lot of different markets, especially the business market and so on, that if you haven't done so, trust me on this one, get as much business between now and the end of the month as you possibly can in the hands of ANICO. Michael will give you his personal cell phone. If you've never ran a scenario or an illustration, he'll even walk you on your first scenario so you can learn how to run illustrations using their software. Again, I don't know if anybody else that I would have here with me today. And so I just want to introduce him and also let you know that ANICO recently got sold. And people have been asking me, what does that mean? Well, I don't work for ANICO, so I'll let the guy that does explain to you what it means. But let me tell you, it's a good thing. It's a great thing. And again, I just would love to see more of us diversify our business, sending it to ANICO as much as we might send it anywhere else, because it's in your best interest and the best interest of your clients. And having said that, without any further ado, I'm going to present to you now Mr. Michael Harding. Michael, it's all yours, sir. And thank you for being here on this beautiful Saturday morning. I really appreciate it and appreciate your time. So it's all yours, sir.
Hey, thanks, Javier. Yes, just to reiterate what Javier said now, there's very few people I get on webinars for in the evenings. I'm an East Coast guy. Get on them in the evenings, get on them on Saturday morning like this. Javier and I have known each other since 2005, as well as Shirley. I've known Shirley since 2005. And, if you've got Shirley being on George's call tomorrow morning, along with having Javier here, if you don't already know this now, you have two of the best leaders, two of the best folks that understand this business and can help you run this business that exists in all of FFS, right? They've been around it for years. They know it. And like Javier complimented me now, you guys know his family. Love Marcella. I tell you, every time I'm around Javier and Marcella, all we do is just die laughing. We just have more fun than anything. And a quality family that he and Marcella have created. And as I get a little older, as you can see around the sides, that stands out to me more and more these days as our kids are getting older and we're having grandkids and doing all those things. You actually really get to see the job we've done as parents and all that. And I appreciate being here this morning, Javier. I really do. So I appreciate all of you taking time out of your mornings to be here with us. I now am, my watch is on West Coast time. My body is on East Coast time. So I hope you've had a great start to your day. My day started at about 4:30. I've been up, been in the gym, all right, had breakfast, showered, got ready for this, figured out, okay, now you guys can laugh at me, all right? So I'm trying to figure out all the buttons to push, Javier, and all the stuff to do to get my camera to work. Well, the new laptop has its own little button you slide like that, and then you slide open. Wasn't anything to do with the program, man. Go Kentucky. So let me back this up one for everybody. So there's the email, folks. There is the cell phone number. And yeah, I'm primarily now going to update everybody on what happened with American National late last year, during last year, I should say. I shouldn't necessarily say late last year, but during last year, and then what closed up with us the first part of this year. So would you please join me in meeting the new American National Life Insurance Company? So don't know if you remember or or remember hearing about it, whatever. But back in 2021, the Moody family, who had started American National and ever since had owned the controlling, 2/3 of the controlling shares of American National. We were a publicly held and traded company, right? They had held those shares and basically ran the company as though it was, their company, because it was really, right? And in 2001, they floated the idea of selling American National. And almost immediately out of the gate, we had 55, maybe a few more than that now, interested parties. So 55 entities that wanted to look at American National for potentially buying it. Well, now the Moody's weren't just interested in selling American National, right? They wanted to maintain the essence of American National. If you remember, you've seen it in my early presentations, American National was started as a small business. It was started by William L. Moody Jr., right? He came back to the island where he was born after the hurricane of 1900. In 1900, a hurricane came through Galveston and destroyed it. I don't mean some of the pictures you might have seen on the screen for some of the floods, maybe back in Kentucky over the last couple of weeks, or some of the things that are going on out here in Vegas right now with the monsoons and all that. I mean, destroyed it. I don't know that there was a building left on its foundations. There were 10,000 people dead. I mean, it was just horrible. And so in 1905, William L. Moody came back to the island where he was born, and he started American National to rebuild the island of Galveston. Okay. And so they wanted American National not to end up getting torn apart. Many times whenever a company comes in and buys another company, they give them a little bit of a chance to operate and so forth, but then they, if they tire of it, they'll take the business parts apart and they'll sell it off. And that's not what American National or what the Moody's wanted to do. They wanted American National to continue to be the cornerstone of the community there in Galveston. So the Moody's quickly narrowed down those 55 to about 5 different entities that they liked. And almost as fast as that, then they fell in love with Brookfield. Right? Brookfield wants to be a major player in the U.S. protection market, in the insurance market. They've said to us since, right, that they want to be a top 3 annuity carrier, and they want to be in the top 5 of life insurance carriers in this country. Right? And so now they aren't changing our management. They're not changing our offices. Right? Our offices in Galveston are going to remain. South Shore, Springfield, Albany, New York, all of that's changing. None of the management is changing. Brookfield likes the opportunity that American National presents to them in this market, and they want it to go bigger. Our new president, CEO Tim Walsh, said the difference between working with the Moody's and working with Brookfield. And now it's Brookfield Asset Management. So if you hear me call it BAM, that's what I'm talking about. Right? He said the difference between the Moody's and working with BAM is that the Moody's played the game not to lose. And BAM is here to play the game to win. And whether you're a sports person or not a sports person, I think everybody understands the difference in that of playing not to lose or playing to win. And now we're here to play to win. Now, BAM is a $725 billion global asset manager and an owner and operator of strategic businesses. Right? They have a history of buying businesses in industries they want to be in and taking those businesses and helping them succeed. I'll show you that in a second. Along with that $725 billion, BAM has 150,000 employees worldwide. They have over 1,000 global investment professionals in 30 countries on 5 continents. That's who we're a part of now. Right? Now, this may be the most important slide I have to show you today, because this shows us as the third leg. You understand from working here with FFS and hearing all the things that you have to do, or not have to do, but understand that a stool doesn't stand with one leg or two legs, it needs three. And you hear that with all kinds of the things in your business. You know, you got to be good for the client. It's got to be good for FFS. It's got to be good for you. That's the three legs of that kind of thing. Well, for Brookfield, we are the third leg in their insurance operation. So Brookfield Asset Management Reinsurance Partners owns Brookfield Annuity Company based in Canada. They have North End Reinsurance, and now us. And the fact that we're under the umbrella, right? We're in the structure, because sometimes a company will come in and buy something. This was a merger. That's why nothing's changing with us, right? Brookfield doesn't want to change us. Sometimes a company will come in and buy, and then they stick you on the outside over here. They put you on the outside of their structure, and they put the pressure on for the sales and for this and for that. No. We are right up under it. It merged right into it, right? And we're not on the outside. They have a huge history of investing in the backbone companies of the global economy. And this group sees an opportunity to do something in the United States, and they chose us to do that with. Now, what I've personally seen now since they've come in and started working with us, is they've put their money exactly where their mouth is. Right? They just didn't say, we want you to be in the top 3 annuities, go. They just didn't say, we want you to be over here in life insurance, go. They've come in and they've said, what do you need to get there? Right? They've been at the home office at Galveston working with not only my EVP, but with my VP, Craig, and with all the folks that are feeding them the information to say, if you want us to be there, here's what we need. And they are bringing it responsibly, but they are bringing it. And it's been nothing less than impressive now about what you've seen from this. So if you haven't met the new American National, I encourage you to come back. If you've been here once and didn't like, or you haven't tried it, you haven't seen it, come try the new American National. You'll be impressed with what you have. Now, going on today, things that are happening with us today, some from the merger, some were going on even prior to the merger, right? So our retention is working to move higher. Retention is the amount of insurance now that a carrier keeps in-house before we have to go out to reinsurance. Right? We had a little tiny retention number with the Moody's. They finally late allowed us to move that up to 5 million. We expect that. I don't have a timeline for you now, but we expect that to go higher, much higher than the 5 million, so that we can keep that business in-house, which gives us a lot more options for what we want to do. And I imagine being part of the BAM, the Brookfield Asset Management Reinsurance Division, that will give us more options in the future as well. Just like the second bullet point here, we are getting in the premium finance market. We have interviewed the big players in that market. Oh gosh, Craig was here with me earlier this week. It's around the corner. Don't hold me to this now, folks, but a couple weeks we might be announcing that we have enough stuff in place to start getting into the premium finance markets, traditional, maybe Kaizen's competitors. I'm not sure where that's all landed. I'm not in on all those conversations. We are going to get into the survivorship life market. That again was something that the Moody's did not want to be in. Don't know why that's the case, but survivorship life, in case you haven't heard what is happening with this, estate planning exemptions are up around $12 million at the moment, meaning that if somebody passes away and passes assets down to their children, think of it not even as children, think as from one generation to the next, so parents to kids down to grandkids, like that, right? Then there are ways that some of that might not have an income tax, But if you have more than that $12 million threshold, you're going to have to pay estate tax. There's both a federal, or you hear it called inheritance tax sometimes. So there's a federal one and a California one. There's state ones, not just California. I think every state has one. And the California limit is not 12 million. So as you've known from home values and different things, people can be close to that limit without even really thinking about it, just because the things they owned have appreciated and maybe they haven't, just kept up with those values. That's not the big thing. You think, well, $12 million, that's a big deal. It is a big deal. But in 2025, that's scheduled to drop to 6 million. It's up there at that 12 million. It was put in place for a short period of time. And 2025, boom, it's coming back to 6 million, which means a whole lot more people may be subject to that estate tax than are currently. And again, you need to check out California's rules, because they may not have near that number that's exempt from the estate tax, right? And so our first entry into this is going to be a survivorship version of our guaranteed universal life. Because in that arena, the most important thing about it is having a death benefit that is there, that your beneficiaries can use to help pay those estate taxes. You can't get out of them, but you can use life insurance to have liquidity to pay them, right? You're going to see other product enhancements along with that premium finance. We're going to have an early cash value rider that will allow us to do the premium finance. I had a lot of questions at convention about the be your own banker or infinite banking ideas. And so you've got a lot of folks maybe interested in those, where the early cash value rider will allow that to happen. We'll have to look at the numbers, see where it all lands. On the annuity side, I'm not even going to get into those and tell you anything about those. We're going to have products. We're going to have to get into markets. If they want to be number 3 and be above 3 billion, up to $5 billion of annuity business per year, we're going to have to make a lot of changes there. So stay tuned, and we'll put more of that out there for you when we have it. This is not coming soon. This is already in place. This is something we did in anticipation of the premium finance and a few other items, markets we're getting into these days. If you have policies submitted with us that have annual premiums of $25,000 or more, right, you will land in our concierge service. That's not just underwriting. That is case management. That is a high touch, white glove service, because if you have somebody in those arenas, that's what they need. That's what they expect, what they're used to, and that's what you need. All right. The first person to experience this has been a young lady in Shirley Lou's team. This young lady is insuring a developer. This developer is getting an award, a contract awarded in the tune of $85-90 million for this development. And they needed a life insurance policy to help secure that loan. And that face amount on that IUL is $30 million. And the annual premium on that is going to be 1.29, almost $1.3 million. And obviously that's well within the limits of this. And I have watched this in application, and I think you'll be very excited with that. Also, back in June, we upgraded the look and feel of our illustration software. I know some of the companies that we work with, they promote the fact that they have an app, right, that goes on your phone, and it's got some cool stuff. Don't get me wrong. I'm not taking anything away from what they've done with that. In fact, I'd like to have one of those. But at the same time, go to your phone and go to our website. Our website is mobile enabled, is the word that IT uses. Right? If you hit our website on your phone, you can get to every single thing on our website. You can log in, you can get there. What this did with this upgrade, it also brought along some functionality that makes the illustration software just fit a little better. right? And so I don't know how many of you run illustrations or run quotes or, heaven forbid, take an app from your phone because it's so tiny. Maybe that's maybe that's my age talking, right? Right. But if you want to do any of that, just hit the IMG, www.img for independent marketing group dot ANICO web, one word, so ANICOweb.com, and just look at how well the website functions on your smaller mobile devices. It'll work on your phone. It obviously works on your tablets, your Macs, your PCs, anything you have that way. All right. EDelivery, right, came out the Monday after, actually late Friday afternoon while we were at convention. They flipped the buttons, turned it on. So it's been out there working now for 2 full weeks. So any policies that any of our teams have had, issued have come out on the EDelivery. I had 2 of the, actually had Jennifer Richards. Some of you may know her as Jennifer Cron. She is the supervisor of the FFS team. And then Rebecca Darnell, who is the senior manager of the FFS team at American National. They were actually here with me this week also. And, Rebecca's team is in charge of handling any of the clients that do not want the electronic delivery, they want a paper one, or any of the questions that come in. And they were telling us that this has been one of the smoothest launches of an upgrade, an IT upgrade that we've had at a company. And I tell you, a lot of times in my position, it's like being a doctor. I don't really hear from anybody when things are going great, right? I only hear from people when there's a problem, right? When something's sick or something needs to be fixed. And over the last 2 weeks, I haven't received one phone call, one email, anything about this e-policy delivery. So it must be working very, very, very well. Now, a couple things on products that, again, have recently been because of the merger. Now, we've got 2 annuities at the moment that you want to know about, right? And they're 2 that are super simple in design. They're super easy to sell. It's not a product training now this morning, but one of the products is our Palladium multi-year guarantee annuity. And what this is, it's a fixed annuity. There's no indexing. There's none of this when the market goes up. There's none of that. It's guaranteed interest rates. And you have guarantee periods like you see on the screen from 3, 5, 6, 7, 8, 9, 10 years. You have technically a 10-year surrender charge in the product. But what is wonderful about the product is at the end of each of those guarantee periods, you see it in red at the bottom, you have a 30-day surrender charge free period. So what you essentially have now, if you want the 3-year with the 3-year rate, I'll put on the screen in a second, you have a 3-year annuity. If you want the 5-year rate, you have a 5-year annuity. Okay. Now, you don't want to miss the 30-day window. I'm always straight up with everybody, because if you do, then the product renews for the remaining years of the surrender charge schedule. So if you have a 3-year product, put something in a CRM, put something in your reminder, watch the annual statements coming out, keep up with it, because if you let it renew with us, it renews for 7 years, right? Same with the 5. If you got the 5-year rate, then be on it on that 5-year, 1035 the money someplace else, transfer the money someplace else. Client can just surrender their policy without any charges, whatever you want to do during that 30-day window, but be sure you're in that 30-day window. Right now, these are climbing. These are some of the highest rates you're going to find for these time periods. And we anticipate now, and I don't know that it's going to happen for sure, we anticipate these rates going up at the 1st of September. And so where's the sale in this? Think about people that just want interest rates. And you might be going, Michael, who just wants interest rates these days? Well, that was a valid thing to say just a few months ago, right? Now, with the Fed raising rates 2 or 3 times since the first of the year, right? You now have people, so take the 5-year, for example. If you have somebody just sitting with their super conservative money down at the bank in a CD or in an old fixed annuity that's not renewing at higher rates, right? If you got 250, that's a 4.2% guaranteed interest rate for 5 years. 4.2 guaranteed for 5 years. No, maybe you'll make 4.2. No, zero floor. No, there's none of that, right? So if you want to show them a little illustration, you can pop right in the illustration software where all the life insurance is. You can go to the Palladium 5-year, put in 250 or more. And at the end of 5 years, you can point to that number and say, this is what is guaranteed for you to have at the end of 5 years. And your prospecting question with people is, how's your interest rates doing these days? How's the bank treating you on your interest rates? And then see what they say. Their response, no matter what it is, will tell you, oh, well, the bank, they're killing me, right? Well, it's not even so important what the bank rate is, really. They just told you they have money at the bank, right? Yeah, I've got an old annuity just renewed for, 1.75. Oh, the rates are killing me. Oh, really? Well, what if I could show you an interest rate of 4.05, 4.20, 390 for 3 years? That's the sale. There's nothing more than showing them the interest rate. If they're making 1 or 2 and you can give them 4, if they're not interested, that's fine. Everybody has the ability to make a poor decision. You can just let it go. But that's as easy as this thing is. You can hit the website and get the summary on it on the back cover of the brochure, and you'll know everything you need to know about the product. Now, on our index annuity, you're going to see that our caps and everything are going up. Not sure so much that the caps are going to go up September 1st. We do expect that our roll-up rate on the lifetime income rider might go back to the 7.2% we had for years here. So if you look at the 4 or the 3 that are highlighted, I get the question all the time, right? What would your allocation be if it were you today? And I'll put the red boxes around the 3 to choose from. Any percentages you want. There's no right or wrong. There's no truly best allocation. I know some of the competitors, put things in their illustrations or in their marketing, materials. If you'd had this, index and 23.8% of this one and 42.6% of this one and whatever, that's looking in the mirror. And there's no guarantee that that's going to be what it does going forward. So if you're wanting people that want the safety and they want the upside, I've been recommending a third in each of the 3 of these. Then you've got some of your money in the right place all the time, whatever that right place happens to be. If you put a third of your money in the S&P, then your money is linked to the U.S. economy. If you put a third of your money in the NASDAQ 100, then a third of your money is linked to that top 100, usually more tech companies, right? So even though the caps are the same, right, the NASDAQ will be a little higher and a little lower when it does than what the S&P normally does, just because of the nature of the 2 indexes. And then the Mark 5 is a low volatility index. You see that has 125% participation, right? As much as they've liked for it to be low volatility, it doesn't always balance out. I think the way it's designed, it's had some pretty good numbers actually in its short period of time. And so, as an example, now if this does a 10% return, which it has a couple of times, then you're making 12.5%, right? So just take 125 times, even if it's 5%, then you're making that much more on top of it. If it's 6%, you're making that much more on top of it. So 33, 33, 34, you're good to go. Like I said, this lifetime income rider is coming in at 685 at the moment. We kind of expect it now. Again, I don't have a timeline for you to go back to 7.2. But the thing about this that's fantastic is that you have one of the smallest fees for that type of rate. That 1% is an absolute steal for a 685, especially for a 7.2. If it goes back to the 7.2, it's an absolute steal for the cost of guaranteed lifetime income. All right. And last thing I'll touch on here today to make sure everybody has seen this. This is our signature performance IUL. It took the place of Life 360. Life 360 had run its course and was no longer viable for American National to keep on the books and to keep it going. So we discontinued Life 360, and this is now your highlighted Index Universal Life with American National. And the reason I bring this one up, as you can see, are the two, not necessarily the two uncapped strategies, but the S&P 500 uncapped strategy. So did you know that if you had our product, if you had been using our product and been allocating money to the uncapped strategy in the S&P 500, then your average interest rate last year was almost 28%. Now, as most of you know, right, indexing, starts your indexing. Come over here to the right-hand side or the left-hand side with me. This is a piece you can find on the website. This is a piece titled Index Crediting Opportunities. We publish the actual credited interest rates for our IUL. This piece contains those interest rates all the way back through 2014. The product goes all the way back to 2009. The interest rates that we have are all the way back to 2014. So as we go from this, I'll make little marks here at the top. So this first column, I'll put the X, this is your segment start date. So this is when your indexing started, right? So if your indexing started in January of 2020, then that means it ended, right, in January of 2021, right? Okay, so this is the actual change of the index. So this is the actual change of the S&P. Now in this column, you can show folks the zeros, you can show them the big numbers, right? Here's your value cap strategy. This is our cap strategy. This column shows you what the cap was. This shows you the segment interest rate credited to your policy. Over here, this is your uncapped interest rate strategy. This is the interest rate spread. What that means is whatever the index does, like January did 16.26%. We take this spread, we subtract it from here, and you receive the remaining amount. No cap. All right. This column is the segment interest rate credited to your policy. So I'm going to circle April 2020 to April 2021. The market was up 62.71%. Come over here to the spread, subtract 475 from the 62. April money in the Signature Performance IUL made almost 58%. And as most of your clients are doing, most of your clients are paying monthly premiums, which is absolutely the most fantastic way to fund your IUL. Even if you're overfunding it, even if you're cramming money in it in the first 7 years, annual payments, annual premium payments, put all of your interest on one day. You have one chance to make interest in your policy. If you spread it out and have it pay in monthly, even if you're maximum funding it, you have 12 different dates and 12 different chances to earn interest in your policy. So as you were coming down in February, March, April, what was happening in 2020 in those months, right? May, June, was the market down? Did the market go down in 2020? I think it did, right? And so when it turned around and came back out of that drop, then you see these type of returns. And if you had money in every single month in 2020, then your average was that. Now I have one question for you. All right. What's the market doing except for the last couple of days? What had the market been doing this year? It had been trekking down like 2020. All right. Inflation, gas prices, whatever, it worried the market. People were selling it off. It was trekking down just like this. In our policy, in our product, the indexing has annual reset, which means you start making money and it resets every year on where the S&P is. So if you were getting this market on its way down this year, why would you want, when the market comes back out of this, and it will, I don't know if it'll be 2023 or 2024, maybe not until 2025, don't know. But whenever that happens, why would you want all of your money with a cap? Why would you not want some of the money in your policy, in your index universal life that you have for the tax-free retirement part of this product? Why would you not want some of your money in an uncapped strategy where it could capture those big moves of the market? And you can do that with American National. Now, in this product, right, your allocation, you can pick some of the other indexes if you'd like now, but you want 50% in something with a cap, and you want 50% in something without a cap. Reason being this, look down here, some of these spreads are 7.25. So if the market itself does a little year, if it does a 5% return, and all of your money were in the uncapped strategy, then we would subtract 725 from 5, which would leave you a negative number, which means you make 0 because 0 is your floor, right? Market's up, you made 0. Okay. If you do 50% of your money in the cap side, then if the market's up 5, you make all 5. And if you have 50% of your money in the uncapped side, if the market's up 35, you subtract the spread and you make the rest of it. So with a 50-50 mix between a cap strategy and our uncapped strategy, the only time your policy ever has a 0 is if the entire year was down from the year before. Okay. Folks, Javier, thank you very much for allowing me to be on here today. If anybody has a couple of questions, I've got a few minutes to take some questions or whatever we need to do. So again, sir, thank you. Look forward to seeing you soon.
Perfect. Okay. Well, thank you, Michael. Hit the stop share.
Oh, yeah. I got you.
First,
yep. There you go.
It'll bring it down. But what I want to do at this point is turn it over to anybody who has any questions, comments, concerns. Like I started with, and I know some of you got here a little. You'd be double dumb not to at least look into sending business to Michael for the mere fact that what's happening right now, your best interest in your client's best interest. Any questions? Anybody? Go ahead. Questions?
Yeah, Michael, this is George Munoz. How you doing?
Hey, George, how you doing, brother?
Oh, I'm doing great. Hey, just a quick question. I know this is all great stuff, and I'm really looking forward to the enhancements that Brookfield's going to bring to the table. But any activity or anything that we should be expecting on the 412E, the pension side of the house, that you guys have in your coffer, is that still going to be around, or
yes,
what are you guys doing with that?
Oh, totally. And thanks for asking that, George. I didn't mention that in some of the things. The pension department, Brookfield loved the fact of that. They like that we're a major player in the small business marketplace. I don't know exactly where they want Bob's numbers to be, and Bob Klein being the director, the AVP of the department. They want that to grow just right along with us. And so the designs and everything that we have for that, well, as you know now, the 412 parameters are laid out by the Department of Labor, and the tax code. And so those haven't changed. I don't know of any legislation that's coming along that is going to change the core functionality of that. I imagine as we're developing new products and doing some new things and enhancing some of the annuities, we might change the product inside the 412 if we have a better product that has the guarantees that design needs. But other than that, no, that thing is steady as she goes. She's ready to take off. And so if you have clients or anything in that, get with me. I can show you where the stuff is on the website for the request for proposals and any of that we need to get going. So,
okay. Thank you, Michael.
Yeah, hi, Michael. It's Katerine. How are you?
Hey, Catione, how are you?
Good, good. Thank you. I wanted to see if you guys are planning to have a slot for your life insurance policies in the federal arena.
Now in the federal arena, we already have that. We've been doing payroll deduction for federal employees 20 years now. It's all set up automatic. I mean, just it's so email me, remind me, call me something, Catione, and I will get you that information. Yeah, in the federal
Okay.
market now, we're there. It's all done.
Okay. I thought it was just annuities, so that's good to know that the life insurance is part of it too.
Yeah, yeah. The way we have it set up with the federal government, it's any product that we have now. If a client wants term insurance, they go in, set up their allotment in their payroll system. We have all the numbers to give them, the routing numbers, the bank numbers. When taking the application, instead of putting their bank information, their PAC information on the application, we have a specific code that you put on it that directs it to what we call our franchise department. And yeah, that just matches right up, and client does their thing. You put the code on it and voila, it was ready to go.
Great. Thank you.
Yep. Let me know what you need.
Hey, Michael, this is
Thank
Alan.
you.
Hey, Alan, what's going on, bro?
Hey, how are you? Thank you. Great information. Great speaking with you at the convention. Quick question for you on that Palladium annuity. I believe I spoke with you briefly at the convention. Quick question: is that a single premium, or can they continue to feed that?
No, good question, Alan. That is a single premium product, right?
Okay.
We have a fixed annuity that's flexible. Rates really haven't moved that much on it. I imagine it'll take a little while for rates, if they continue to rise now, it'll take a little while for that to be something that's more attractive. But now the Palladium single premium, yeah. So bring the big chunks of money. You can go down as low as 10. Oh no, Palladium's 5,000 no matter what is the minimum, and then 3 million is our maximum. So if you do run into somebody that wants to bring a big chunk of money to us, I do have an avenue to get an exception for a little bit more than the 3 million. So don't be shy about asking.
Okay, thank you.
You got it.
Anybody else, guys, before we wrap it up? All right, Michael, you can expect 10 applications from every person that asks you a question right now this week. So,
I'll do
all right,
this.
cool.
I won't hold my breath.
There you go. All right. Well, I just want to remind everybody that I put the link inside the comments in regards to the link to register for Leaders Convention 23. You know, very few people have that kind of vision, but I'm telling you, before you know it, time will fly, and 2023 will be here. So you might as well save a few bucks, and then if you qualify for the free trip for your vacation stay, well, you don't have to worry about the hotel being on the strip as well. So anyways, I'm not going to make this longer. Last call for questions, comments, concerns. We're going to go back to our regular training. I don't want to spoil it and steal my own thunder for next Saturday, but let me tell you, you're going to want to be part of the webinar next week, because we're going to talk about marketing and how to increase. I will give you a little bit of a hint. It's official this week. We are sponsors with the LAPD, with the Baker to Vegas 2023 race. It's official. We are the insurance and retirement provider for that. And with it are going to come a lot of opportunities that you're going to want to be a part of if you are prepared and you know what you're doing. Join me next Saturday morning to understand and get a link to our Baker to Vegas fundraising flip chart that we are using as well. All right. If no one has anything else, I just want to say thank you to everybody for being here this morning.
Javier,
Go ahead.
I did have one last thing. Can you remind everybody, if they do want to get on the mailing list or the text reminder for Monday's webinar, to just either text me or call me. Let me put it in the chat real quick. I don't want to make this take too long, but I think I've shared this before. So everyone, if you guys do want to get, I'll put on there to send me your email, cell phone, both, one or the other, at least one or the other. And you guys will get a reminder before the webinar will actually start. So I'm going to go ahead and put in my phone number in the chat box for everyone. So there's the phone number. And if you prefer to email me, just use my personal email. That's the one I check the most. So it'll be the one that you guys can use for that as well. I'm putting that in there. And there we go. So everything's in the chat box if you guys do want to be reminded about webinars for Monday morning at 10 a.m. every Monday morning, except for holidays.
Cool. All right. And Shatika, thank you so much for the comment in regards to the great support that Mr. Michael Harding offers. And I'm telling everybody, diversify and get with Michael, get with ANICO. You're going to be glad that you did, as well as your clients. And so again, give them a call this week. Make this the most productive week in the history of your business by applying what you're learning here today, and take your business and your income to the next level. Thank you so much, everybody. Have a great weekend. Talk to you then. Bye-bye.